In the previous video of Option Basics series, you saw selling a covered call and selling put. This video will show how you can combine both. A covered call and cash secured put selling strategy over a long term is a substitute for a conventional buy and hold stock investment approach. It aims to generate modest, but consistent returns through an income-focused approach, as opposed to taking a speculative gamble on long calls and puts. Let's now recap couple key takeaways from previous video. If you had not watched the previous one, I would recommend watching them, since I am not going into detail of those concepts here. We saw this chart which explains when you want to sell or buy call or put. Since we are covering only the sell here, since the premium we collect is the income strategy we are going to use here, we will focus on just selling call and selling put, which is combination of bearish and bullish. Yeah, you surprised how you can make consistent money with this? We'll get to that in few seconds. Also, we saw that for selling put, we need cash to be secured. Also for selling covered call, we need 100 shares of a particular stock to be in position. Since you already know both, how about we keep alternating the same sell call and sell put? Yes, that's what we are going to do here. Okay, let's assume you have some cash position to buy 100 shares of some stock. First, you do a sell put and collect the premium. Since it's the recursive workflow, the contract date must be short. Since we will be relying on time decay and to some extent prediction here in short term. Most of the time, you might be doing at the money contract. Let's wait for the expiry date and you see if your contract expired out of the money. If so, then you still own your cash position plus the premium you collected. Now you can repeat the sell put again for the current at the money price. If it expired in the money, then you buy 100 shares. But remember that you still own the premium collected. Since you are now holding 100 shares, you are now eligible to sell a covered call, for which you will require to own minimum 100 shares of any stock. Let's sell a covered call here now for at the money strike price and collect the premium. Again, if it expires out of the money, repeat the process again. If it expires in the money, then you are obligated to sell the shares. But you have your cash position plus the premium collected now. Now we completed the full cycle and back to cash position. Hope you got the idea of selling put and call recursively. This is called wheel strategy, since you can keep repeating the same again and again. Now, let's see that in a chart to see how we can map it. Here, I picked up the SPY ETF, which is one of the ticker which has got more options chains to choose from and also its index ETF and it's expected to be low volatile. But, sometimes like the current macro condition might still make it volatile. This is the SPY daily chart in last 1 year. Let's divide that into 2-month segments. When I looked at the 60-day contract for the at the money strike price, I could see we can get around $1,000. This is the option chain. See, here for the 60-day time to expire. The at the money contract price is $1,055 for selling a put. This is just an approximate. Okay, let's assume you started with sell put on start of the year. Around last year February, the price was $424. Let's sell the put for at the money strike price with 2 months expiry and collect premium. In April, we see that the price was $454. Which is out of the money, since it's a put. For put, if you remember. For seller, it's a bullish call. Which means if the price goes up beyond the strike price, it's out of the money. Since it's out of the money, you keep the premium and the cash. Now, you can do another sell put for the current strike price, which is $454 and collect the premium again. The price is now $412 and it's in the money. Which means, now you have to exercise and buy 100 shares of SPY. The cost basis will be strike price for 100 shares minus the premium you collected. It's interesting now, given that the current price is well below the cost basis. What needs to be done? You can do couple of things here. 1. Sell a covered call for the strike price same as the cost basis. In that case, the premium will be very low but it's the safe bet to not lose any money. 2nd, sell a covered call for at the money strike price. But here, the problem is the stock needs to stay the same or move lower. For this use case, we will assume that we will play safe and sell a covered call for the cost basis price. Here in August, the close price is almost same as the price which started in June. In this we collected all the premium and again we can sell covered call again. October it expired out of the money, since it's covered call and the expectation is to expire below the strike price. But this time, it's going to be tricky. If we go for a 2 months and strike price with cost basis, we might be getting very tiny premium. Either we can still do a covered call for the same or wait for it to come back to a level where we can collect some good premium. Alternate, you can go for a little bit more longer time. Hope you got a fair idea on what needs to be done at different situation and how to decide the strike price and contract period based on the price movement. Few tips to add. Pick up index ETFs like SPY, which will be low in volatility. Pick the duration based on the premium, but still within the short duration. Not to use the secured cash for other investment, else might be hit with margin calls. Do a covered call strike price less than the cost basis to avoid loss. Wrapping up, if the trend is sideways, that will be the best of other two. But still, since it's a wheel strategy, you might have to pause for a while or collect a little premium if the direction is against you. But still you continue to make recurring income. Hope you were able to get the wheel strategy with some basic concepts and examples. Hope you enjoyed the video. Please subscribe to my channel if you like to watch similar videos and help my channel. Thank you, see you in another video.